the classic volume profile trading strategy versus the level 2 liquidity trading strategy. If you compare those two, which one can really help you to become better trader? So on the one side, volume profile trading is like being used by so many traders for so many decades. Level 2 is little bit complex, but it's gathering steam. More and more new traders are finding the success in the trading strategies right now with the level 2. But let's compare one on one, that too for a trader who have been trading volume profile for few years. How does it help? That's the discussion I had with one of the customers today. He comes back from trading volume profile, walker profile for years. He has some success and some failures. It's a mixed reaction. The reason was he is still struggling a little bit on the consistency in terms of the entries as well as the stop loss, and of course overall trading success. That's why he called us asking for how can the level 2 trading will help him with the background traders like him. So instead of sharing only with him, I want to share with everybody. Join here. This is going to be much more interesting. Volume profile. Let me add the volume profile right now on the chart. This is years, um, Wednesday, January January 7th. So let me start. Let me add those volume profile. What I have here, simple volume profile, breakdown down by the hour, every 1 hour on a US market. Typically, the way they trade in the volume profile, they wanted to find where the point of control as well as the critically the entry is based on exactly the area where there are like a low node, something like there are a lot of volume traded here. Moment they can see like this is where the low node, anytime the price goes and then keep coming down, because this is what exactly happens. Once the area crosses, they bounce, they take the trade typically. That's why even if you see here, um, this is one area where you can see it happened in this volume profile. You can see this is a POC, this is the low area node, price came down, go from here. This is how the volume profile is being traded. But one important issue that most of the volume profile traders face is, okay, I can see this range where the low volume, so this is the low volume range, where that means prices tend to bounce up. If at all breaking through, it bounces from there, it's a good trade. But where exactly would you place your stop loss, or where exactly you would enter? Because if you think any random place a stop loss, that's where you fail completely. Even in this case, this is where the low volume prices, anytime it goes through and retested, it's a good trade. You can see those things happen again and again, even right here. Okay, even right here, anytime it goes down, it's a trade. But my point is, it does not give you the confidence of the entry as well as your stop loss, where exactly you can enter, where exactly you can place a stop loss, and also when exactly the trade fails, you can exit faster, minimize your loss. That is the most important part. So for that, I wanted to switch the same thing with liquidity trading, because this is what we use. This is based on what you see here, the indicator called BSG liquidity zones. It takes the level 2 data, level 2 order book, market depth, analyze those information, and plots only the strongest liquidity the market is controlling. Okay, in this case, you can see the market was right here, the market opened right here, 8:30 for me, I'm in central time. The market was like almost like until 10:30 was range bound, but that's why I didn't take any trade in this area. But one thing clearly off mark, you can see the strongest liquidity on the bottom of the range, and then strongest liquidity top of the range. This is the clear indication. It's going to give you um, the range of the market by visually looking at it. You can see there's a resistance stop here. There's a lot of sellers. Anytime price goes up, pushing the prices down, there are a lot of buyers pushing the prices up. So by looking at it, I clearly see I don't want to take any breakout trades unless the prices goes through and then bounce from there, or come down and then break from there. So this is what I was looking for. Until that happens, any trade that we take in between the range is a high risk trade. So being that said, the question we need to ask is, okay, when exactly I can enter? That's when we look for one particular setup that we always talk about. Let's say the price is going up, you see a lot of red lines, like here, red lines. The prices, let's say price is going up, breaking through, come back out. When come back out, I want to see the same level where we had the strongest resistance, strongest ask. I want to see strongest buyers stepping in. That's, we call it as swapping. We call that as like, we need to see the controlled swapping from sellers to buyer. This swap need to happen. Moment we see this control shift, and then we also look for the price action. What do you mean price action? The price when broken through, it should come back and retest that level, and then buyers should step in, push back up. This bounce should we see. Again, step number one, we want to see the swap. The sellers become the buyers, same price level, and the price should come back and retest it, prove this. When the price come down to this place, buyers will step in, starts buying it. They won't let the price drop below. Once we see the confirmation, that's exactly we're going to enter the trade. Here's the beauty. When you find the entry just like this, not only you know the direction, in this case it's long, and also where we can enter the trade once we see the bounce. Third most important thing, this is where most of the people make a mistake, stop loss. I'm going to place my stop loss immediately below the liquidity wall, the buyer, where the buyers are. A lot of buyers are already ready to buy. If at all price need to touch my stop loss or take my stop loss out, they need to go through these barriers. Buyers, a lot of army of buyers sitting right there. They need to go through that particular wall. We call it as liquidity wall. So this liquidity wall is going to protect your stop. If at all you're going to get stopped out, price should have the greater momentum, greater than the strength of the buyers. If it come down, in that case the trade is gone. So that's why this setup is going to give you the great entry, great stop loss, and the great confidence level. And then you don't have to move your stop loss. How many of you move your stop loss after the enter the trade, after you initially step the stop loss? Oh, price is coming down a little bit close, let me pull back a little bit, let me pull back a little bit, and then you're increasing your risk and then lose big on your trade. So that's why it won't happen. Let's look at those entries in this here, because that's the most important part. I wanted to show you here what are the entries we had. Okay, you can see the price went back here. You can see the strongest sellers starting from here, the whole range. You see the whole range, we have a lot of sellers. Moment we can see it was retested one, first time, second time it was pushed. Because the reason I'm selling is this is the most important level. Not only the liquidity swept, once the liquidity swept, liquidity is gone, immediately the liquidity was rebuilt. That means sellers are ready. Once they let's say they have 100 contracts to sell, they sold it, they are placing another 100 contracts, another more contract to sell. That means selling is so heavy in this level. But what happened around like 10:45, price broke through, came back to that level. But I want you to watch this particular liquidity where the strongest sellers was broken out, price broken out, came back. By the time it came back and retested, you can clearly see the buyers already formed. What that means is, once you see the bounce, you have the long entry, you're going to have your stop loss here. Okay, that means if at all price need to get to your stop, they need to go through, take out all these buyers, all these stop losses first. You are hiding your stop behind other trader stops, you're hiding your stops behind other buyers. That is the most important part. Okay, so I wanted to show you this particular setup, how many times it happened. Number one, okay, first trade entry for long, after full chop, full range, buyers, sellers, first time it was broken out by 10:45, we had this trade. Where is the next trade? Look here, this particular level, strongest liquidity. Okay, price broke down, bounce, it can, what do you see? Green became red. It's a perfect short trade because its liquidity is clearly showing you this is the level was bounced before. Okay, now the strongest level, it was broken out, and then sellers who were in this area before, they step down, and then now they are interested in this area. This is what we call it as swap. Once you see the swap is, you can see price retested. That is your second trade. Again, first trade long, right? So long. Second trade, okay, breakdown short. Okay, in this case I want you to look at the next one. Again, you can see there are a lot of buyers here already, right? But price broke out and retested. What do you see? The sellers. Okay, so this is the second entry where you can see from there. What is third entry? You should know by now. Right here, retested strongest buyers right here, retested once, twice, and then broken out, came back here, pushed down, green became red. Absolutely good trade. And then one more time, look at this, strongest liquidity from the morning right here. This was broken out, came back down, retested to this level, and then market closed here. There is no other strategy will give you this much clarity. Obviously, you're not going to find these setups clearly cut right on the day one. If you start seeing the chart, start following the rules we teach, start looking at the chart, finding the strongest levels, waiting till the breakout, waiting till the opposite liquidity forms, waiting till the price came back and retested, that's when you know the magic happens. I can clearly say that the point I want to make in this video is, no matter whatever the trade strategy you use, volume profile, supply and demand, or like any kind of like order flow strategies, nothing can beat liquidity level 2 trading, because this is the only trading strategy that can show you not only the direction clearly and also the entry level clearly. Also, it's going to give you the highest confidence stop loss. That's where a lot of your traders make a mistake. My trading changed once I was able to fix my stop loss. Why? I don't start my trading with the entry, I start with the stop loss. Meaning, in this case, I know once I see the red become green, I'm not looking for, I know it's a long, but I'm not looking for the entry. I know my stop goes here. Once I know where my stop goes here, when the price is here, I won't enter, because if it is here, I need to take this much risk. If let's say my risk is like $300 on ES per trade per contract, so if the price and the rate tested within the range of my risk profile, what is the risk I'm willing to bet on each trade, $300 or $250, if that is in the range, then only I will take it. In this case, this is not even okay. Look at this. Let me show you what I'm talking about. Look at the risk we are trying to take. In this case, if you are taking the bounce here, you are taking the trade from this much risk. How much risk is this? This is 237. That is within my range, right? This is my range. But the best news is not that part. Look at this particular green to red. How much risk you need to take here? How much risk you need to take here? So the price come down, bounce. You need to tell the bounce, right? So in this case, you are taking if you take the trade here, you have the stop right here, right? So how much is this one risk? Just $175 risk per contract. Okay, let's look at the next one. We saw this one, right? The price came back down, came back to the strongest liquidity, and then bounce. Let's say you're taking the trade here after clearly turn. So if you take the trade here, how much you are willing to risk? $200. Everything within my risk profile of $300 per ES contract. But in most of the cases, I can even catch within 150 or below 200. But my since I do have the highest confidence in my setups, because I had traded so many times, I'm willing to bet up to $300 per contract, but average is 200. Most of the average is 200. Okay, so again, let's look at the next one. Let's look at the next one. We talked about this, right? So strongest green buyers broken out, retested. Let's say it need a turn. So we are taking that. Let's say if we take not a trade here, we can't take the trade here because we need to see the bounce. If you take the trade here, you need to hide your stop behind the liquidity. So how much is it? 275, within my range, right? So this is why I'm saying you need to learn to take the trade with minimal risk as possible with a higher confidence. If you don't know where is the ideal stop. You are going to place a stop randomly, then you're going to start adjusting your stop loss once the price starts coming close to a stop, and then you're going to get panic. All the things going to happen. Look at this case. In this case, the moment I place my stop here, I know all the buyers are here. If the prices cross all the buyers, I know I'm done. My trade is out. I lost the trade. There is no way for me to panic and then drag my stop down because there are no buyers here. I'm alone here. So I don't have to touch it. So practice, join liquidity trading, get level 2, apply those rules that we teach in the courses. Take it, it won't be overnight, but it will take time to watch a chart, practice again and again. Once you see those setups, only one set, there are multiple, but only one set of breakout trades, swap. If you practice that, you can trade any instrument, ES, NQ, gold, crude, doesn't really matter. So volume profile, supply and demand, anything, liquidity trading beats. If you think I'm wrong, comment me below and why, or take a screenshot and attach in the screenshot there. I will show you the same trade that you are showing in your chart. I can prove you wrong by showing the same chart with liquidity zones, level 2 setups with a better risk. Thank you so much. Bye bye.